If you are currently receiving Social Security payments, I need you to set aside whatever you are doing right now and stay with me for the next few minutes because 3 separate financial changes are landing for seniors this July. And every single one of them directly touches money that already belongs to you. One of them can cause your monthly payment to stop arriving entirely if you take no action whatsoever. One of them can return $6,000 to you at tax time that most people will never collect simply because nobody ever told them it existed. And one of them places a firm ceiling on the total amount you will ever pay for your prescriptions in a given year, but only if you know about the specific program that unlocks it. These are not distant possibilities that might help you someday. These are real dollars attached to real deadlines connected directly to your monthly check, your tax refund, and your medication costs right now in 2026. And here is what genuinely concerns me as an attorney. The majority of seniors I speak with have either heard absolutely nothing about these 3 changes, or they caught a brief headline without ever learning the one specific action that actually captures the benefit. A headline does not deposit money into your account. The completed form does. The phone call does. The program enrollment does. That is precisely what I am going to deliver to you today. All 3 changes explained in plain language with the exact action required for each one. I am Walter Barron. I am a state bar licensed estate attorney, and for more than 15 years, I have sat across the table from families helping them protect their homes, their savings, and the money the government already owes them. I read through the complicated fine print on these rules, so you are not required to do it yourself. And I am going to walk you through all 3 of these the same way I would walk my own parents through them. Before you decide any of this does not apply to your situation. Stay with me whether you are 62 or 82, whether you are still working part-time or fully retired, because at minimum, one of these 3 changes is going to matter directly to you or to someone you care about. And the one you assume is irrelevant is very often the one that matters most. Do me one quick favor before we start because it genuinely helps this information reach more seniors who need it. Hit the like button. And if you want the rest of these breakdowns, subscribe to the channel. It costs you nothing, and it is the only reliable way the people who need this information ever actually see it. Let me lay out all 3 changes up front so you know exactly where we are headed. The first change affects the payment itself, specifically the way your Social Security benefit actually reaches you each month. If you are among the people this touches and you ignore it, your check can simply stop arriving. The second change is a brand new deduction written directly into federal tax law that can shield thousands of dollars of your income from the IRS, with a strict cutoff determining who receives the full amount. The third change is a newly established cap on what you pay out of pocket for prescription drugs. A number that once you reach it means you pay absolutely nothing more for your covered medications for the remainder of that year. 3 changes covering your deposit, your refund, and your prescription costs. Before we go deeper, let me answer the question many of you are already forming. If these changes are genuinely this important, why has nobody ever explained them to me? The honest answer, and the very reason I create these videos, is that these changes do not arrive with a personal phone call to your home. They appear as a single line buried inside a 1,000-page piece of legislation, or as a notice posted on a government website written in language nobody reads, or as a rule that quietly takes effect while the news cycle is focused elsewhere. Nobody is knocking on your door to confirm you claimed your $6,000 or switched your payment method before the deadline passed. The system simply assumes you will figure it out on your own. And when you do not, it keeps the money or lets the deadline slide right past you. The only protection any of us has is knowing. So let us make sure you know right now. Let us start with the most urgent change because this one has a clock running against it. The first change is this. The federal government is eliminating paper checks for Social Security and transitioning every single beneficiary to electronic payment delivery. If you still receive a physical paper check through the mail, what I am about to tell you is the most important information you will hear today, because the window for acting is closing fast. And if you do nothing, your payment may simply not arrive. This is not a rumor, and it is not speculation. There is an executive order, specifically Executive Order 14,247, signed in March of 2025, directing the federal government to modernize its payment systems and phase out paper checks for federal benefit payments. The Social Security Administration began implementing that transition with September 30th of 2025 identified as the initial target date and complete elimination of paper payments projected by the end of 2026. In plain language, the paper check is being discontinued and recipients are not being given a choice. Everyone is being moved to electronic payment delivery. Who does this actually affect? If your Social Security benefit already arrives through direct deposit into your bank account, you can take a breath because you are already set. Nothing changes for you. The money continues arriving exactly as it always has. But if you are still receiving a physical paper check or you know someone who is, this is the moment to act. Once the paper check system shuts down, a payment with no electronic destination is a payment that never reaches you. Consider who is most likely still receiving paper checks. It is very often the oldest seniors among us, the ones who have handled their finances the same way for 40 years, the ones who do not bank online, the exact people who can least afford a missed payment. That is who this rule can hurt if they never hear about it. That is the reason I am asking you to share this particular information with people you know. Here is your required action, and it is straightforward. You have two clean paths to receive your benefit electronically. The first is standard direct deposit into your personal checking or savings account, which you can establish through your bank directly or through your My Social Security account online. The second option, and this is the one many people are completely unaware of, is something called the Direct Express card. The Direct Express card is a prepaid debit card onto which the government loads your benefit every single month. It exists specifically for people who do not maintain a traditional bank account. So even if you have never held a bank account in your life, there is a clear and accessible path available, and your benefit can be delivered through that card. If you want standard direct deposit, you need three things available: your bank account number, your bank routing number, both of which appear printed along the bottom of any personal check or can be obtained from your bank directly, and your own Social Security information. You can set it up by creating a free My Social Security account on the official Social Security Administration website and entering your bank details there. Or you can simply call Social Security or walk into your local bank and ask a representative to help you establish direct deposit for your benefit. Bank staff handle this request every single day. If you prefer the Direct Express card because you do not have a bank account, request the card through the Direct Express program, and once activated, your monthly benefit loads onto it automatically. You use it exactly like any standard debit card at stores, at ATM machines, and anywhere card payments are accepted. The only genuinely wrong move is to take no action and hope the paper check keeps arriving, because that is the one outcome that is not going to happen. And let me address the objection I consistently hear. Walter, I simply do not trust direct deposit. I prefer my paper check. I can hold it in my hand. I understand that feeling completely. But here are the facts. A paper check is roughly 16 times more likely to be lost, stolen, altered, or returned than an electronic payment. Theft of benefit checks from residential mailboxes is a real and growing crime targeting seniors specifically. Electronic payment is not the risky option here. The paper check is the risky option, and the government is eliminating it precisely because of how frequently those checks get stolen out of mailboxes. There is a narrow waiver provision available for genuinely extreme situations. If you reside somewhere with absolutely no banking access whatsoever, the U.S. Treasury permits you to formally request an exception. The telephone number to call about that waiver is 1-877-874-6347. But that waiver is intended exclusively for rare hardship cases, not for maintaining a paper check simply because you prefer it. For essentially everyone watching, the correct move is to establish direct deposit or a Direct Express card arrangement before the paper check system closes. Set it up now while everything is calm, not after a payment has already gone missing. That is change number one. Which brings us to change number two. This one is not about protecting money you already receive. It is about actively collecting thousands of dollars that may be sitting there waiting with your name on it. The second change is a brand new tax deduction created specifically for seniors worth up to $6,000 per qualifying person. This came from the major federal tax legislation passed in 2025, the package referred to as the One Big Beautiful Bill. Embedded within it is what has become known as the Senior Bonus Deduction. It represents one of the most substantial tax breaks directed specifically at older Americans that I have seen in many years of practice. And yet, the overwhelming majority of seniors have never heard those words, which means most seniors are going to leave this money sitting uncollected. If you are 65 years of age or older by the close of the tax year, you may be eligible to claim an additional deduction of $6,000 on top of your regular standard deduction. And read that carefully because it is $6,000 per eligible individual. So if you are part of a married couple and both of you have reached 65, that is two separate deductions available. $12,000 of your combined income shielded from federal taxation on top of everything you already qualify for. For many retired couples, that can translate to well over $1,000 returned to your pocket. And in plenty of cases, it represents the difference between owing the IRS money and owing them absolutely nothing. Here is what makes this benefit genuinely accessible. This is what tax professionals call an above-the-line deduction. In plain language, that means you are not required to itemize to receive it. You do not need receipts organized in shoeboxes. You do not need a mortgage or large charitable contributions. You take your standard deduction, the simple approach most retirees already use, and stack the full $6,000 directly on top of it. It is as close to genuinely free money as the tax code ever produces. But here's what you absolutely must understand correctly. There is an income cutoff and it is strictly enforced. The complete $6,000 is available to seniors with modified adjusted gross income up to $75,000 if you are single, or $150,000 if you are married filing jointly. Above those thresholds, the deduction begins shrinking. It phases out incrementally for every dollar of income exceeding the threshold. Once a single filer reaches $175,000 or a married couple reaches $250,000, it disappears entirely. For most retirees living on Social Security combined with modest retirement income, you fall comfortably below the threshold and receive the full amount. But be aware that certain income sources can push you over the line unexpectedly. The income counted here includes your retirement account withdrawals, interest and dividends from savings, capital gains from selling property or investments, all of it combined. So if you are planning a substantial IRA distribution during a year, you are counting on this deduction. That single decision can push your income over the threshold and shrink or eliminate the benefit entirely. Spreading a large withdrawal across 2 calendar years rather than taking it all at once can mean the difference between receiving the complete deduction and losing it. A little planning before December consistently beats an unpleasant surprise the following April. When you file your federal return on Form 1040 or the senior version, Form 1040-SR, that is where this deduction gets claimed. If you use a tax preparer, tell them directly, I am 65 or older, and I want you to apply the new senior bonus deduction, the $6,000 one from the 2025 law. If you prepare your own taxes, the software will guide you toward it when you enter your age, but only if you do not rush past that section. And here's the move almost nobody knows about. This deduction is available for tax years 2025 through 2028. If you already filed a return for a qualifying year and missed this deduction, you can file an amended return using Form 1040-X to claim it retroactively, and the IRS will issue you the difference. That is real money recoverable from a year that already closed simply because you now know this deduction exists. That is change number 2, covering your tax refund. Which brings us to the third and final change. This one applies to every person watching who takes any prescription medication because it places a firm ceiling on costs that for many seniors previously had no ceiling at all. The third change is a cap on total out-of-pocket spending for prescription drugs under Medicare Part D. For years, the most painful aspect of the drug benefit was the absence of any real upper limit. If you were managing a serious illness and taking an expensive specialty medication, you could find yourself paying month after month with absolutely no endpoint in sight. That is the reality that has now fundamentally changed. Here is the number that matters. Starting in 2025, federal law established a $2,000 cap on total out-of-pocket spending for covered prescription drugs under Part D within a single calendar year. Because the law includes an inflation adjustment, for 2026, that cap rises to $2,100. Once your accumulated out-of-pocket spending on covered Part D medications reaches that $2,100 limit during 2026, your financial obligation for the remainder of the year is finished. Your plan covers 100% of your covered drug costs after that point, not a reduced share, the complete cost. For a senior taking a $500 monthly medication, that transforms the annual reality from $6,000 in personal spending down to $2,100 and then nothing further. That is thousands of dollars in genuine protection for the seniors carrying the heaviest medication burdens. What counts toward that cap is your actual out-of-pocket payments for covered medications, your deductible, your co-payments, and your co-insurance amounts. Every dollar you pay at the pharmacy for a covered drug accumulates toward that ceiling. What does not count is your monthly premium payment. That cost continues independently. But every dollar you hand over at the pharmacy counter is a dollar climbing toward that cap. And once you reach it, the meter stops completely for the remainder of the year. Here is the action that transforms this from interesting information into actual savings. There is a federal assistance program administered through Social Security called Extra Help, sometimes referred to as the low-income subsidy. Extra Help is designed for seniors with limited income and assets, and it can dramatically reduce what you pay for Part D, including your premiums, your deductible, and your co-payment amounts on top of that cap. A significant number of seniors who would qualify never apply because they assume their income is too high or they have simply never heard of the program. Do not make that assumption. The income and asset thresholds are substantially more generous than most people estimate, and the annual savings can run into thousands of dollars. You apply directly through the Social Security Administration online or by calling the agency. The application form is designated SSA-1020. If your finances are tight and you are enrolled in Medicare Part D, submitting that application may be one of the highest return actions you take this entire year. The income and asset limits for Extra Help have been expanded in recent years, so more seniors qualify for the full benefit than ever before. People turned down years ago may qualify today. The only definitive way to know is to apply and let Social Security run your numbers. It costs nothing to find out. If you qualify, Extra Help can reduce your costs to the point where your medications become nearly free, stacking directly on top of the $2,100 spending cap already in place. Now let me bring all three changes together clearly because I do not want you to nod along and then let everything fade away. Here is the essential summary and your required action for each one. Change 1. The paper Social Security check is being discontinued. If you or anyone you love still receives a paper check, get established on direct deposit or the Direct Express card right now before a payment ever goes missing. Change 2. The new $6,000 senior bonus deduction is real, and most people will never collect it. When you file your taxes, ensure you or your preparer claims it fully. And if you missed it on a return already submitted, file an amended return using Form 104 O-X and recover that money. Change 3. Your out-of-pocket prescription drug costs are capped at $2,100 for 2026. If your income is limited, apply for Extra Help through Social Security to reduce those costs even further beyond that cap. 3 changes: your monthly deposit, your annual refund, your prescription spending, all happening right now, all waiting for the people who actually take the required step. The seniors who hear this and act are going to keep thousands of dollars that the ones who never receive this information are going to lose without ever understanding why. Let us make certain you are firmly in the first group. This content is provided for general educational purposes only and does not constitute legal or tax advice specific to your individual situation. Confirm your personal numbers with Social Security, with the IRS, or with a qualified professional before acting. But do not allow that caution to prevent you from making the call, because the people who take no action are consistently the ones who lose. If this video helped you, share it with one person over 65 who needs to hear it. There is a very strong chance nobody has ever told them any of this before. Subscribe, because I break down a new critical topic like this one every single week.